All right, so I thought I would take a look at some of the markets as the results of the midterm elections are starting to take effect, and really the only market that is responding significantly is the dollar. And as I said in one of my last videos, it looked like the dollar was starting to move down into a daily cycle low. That still appears to be the case here. The dollar still needs to break this uh, cycle uptrend line, though. Once it does, that will confirm the daily cycle low is in progress, and then at some point we should get a bottom and a bounce. So we need to come down, somewhere here. I have no idea how far it will drop, but we should, at least close below this trend line, get a temporary bottom, a bounce, and my bet is that this second daily cycle is going to left translate. Now, it can either do that by failing to move above this top in this kind of pattern, or it could make a marginally higher high above this, but do it very quickly in, let's say, 10 days or less, and then roll over. The key is where this cycle bottoms at, and if price, no matter where it goes on the bounce, if it then rolls over and price breaks below this low, again, wherever this low occurs, if this low gets broken during the next cycle, then that would confirm uh, that a left translated daily cycle is in progress. That would confirm that the intermediate cycle has topped and rolled over, and that would um, confirm my suspicions that we started a bear market back in 2017. It would um, it would mean that the 3-year cycle low that bottomed right here, that this 3-year cycle low is left translating, and that would be confirmation that a bear market has begun. So somewhere here we're going to get a bottom in the dollar. We'll get another bounce, and then it's how this second daily cycle plays out that is going to determine whether I'm correct. And this is nothing more than a bounce in an ongoing bear market. And after tonight, there's really no question at all. I'm correct. This was a final intermediate cycle low right here. The market is, as of right now anyway, is rallying very sharply, a V-shaped recovery rally out of this intermediate cycle low. And I'm just going to make an observation. I know there are lots and lots of people that have, they're calling a market top. The same people that have been calling a top every time we have one of these intermediate corrections for the last 9 years. They're, calling this a final top again, just like they always do every time we get one of these corrections. But my observation is that every time interest rates are um, forced too low and kept too low for too long, it almost invariably creates a bubble somewhere. Um, I would have to think this time should be no different. And uh, in my in my opinion, it looks to me like the bubble is probably going to be in the stock market. And if not a bubble, I think we at least have to have a melt up phase in this bull market. Um, all right, so here's a longer term chart. Clearly, this doesn't qualify as a melt up phase. We just barely um, broke above the highs of January during this. A melt up phase should just run for a very long period of time. Well, not so much a long period of time, but massive percentage gains in a very short period of time. And that, this grinding move here that took us to a marginal new high just doesn't qualify, in my opinion, as a melt up. So um, I think, years and years of low to negative interest rates have got to produce either a bubble or at least a melt up phase in this cyclical bull market, and we just don't have anything that I would qualify as a melt up phase yet. We do have a weekly swing. That was one of the other requirements that I noted, or a confirmation that an intermediate cycle had bottomed. So there seems to be little question at this point that I was correct, and we did get an intermediate bottom here. That would mean that we're on week one of a new intermediate cycle. You can see this intermediate cycle lasted like 30 weeks before it topped. So we should have at least, I would think, at least 10 more weeks before this intermediate cycle tops. And this could be a shortened intermediate cycle, considering that this cycle was really long. I suspect with the Democrats retaking the House, the Republicans are going to try and rush through as much legislation as they can between now and January. And then in January, the market will probably become nervous as the Democratic House takes office, and we'll probably get another intermediate decline in, let's say, through January and early February, as the market tries to determine if the House is going to do anything detrimental to the economy or stock market, and which I don't think they will. I think we're just going to keep plugging along, and I would suspect that we get some kind of a pullback in January, February, and then I think we're off to the races again. As I said, I think two interest rates that are too low for too long have to either produce, if not a bubble, at least a melt up phase in this cyclical bull market before we start moving down into the next 4-year cycle low in 2020.